Myself, Dr. Riya Singh. I am Assistant Professor in Christo Jayanti College. So today we are going to discuss about the financial reporting. Here we are going to discuss about the introduction, what all the components are there of the financial reporting and what is the importance of the same. So financial reporting, first we have to discuss about the financial reporting introduction. So basically financial reporting involves that all the disclosure of all the financial information that to the interested parties. Okay, now if we talk about the interested parties, they all could be the investors of a company, creditors of a company, the public, the debt providers, governments and the government agencies. Okay, so here the company's work is to just disclose their financial informations in the terms of financial performance, in the terms of financial position to these interested parties. Now when they are going to make a financial reporting, then what all the components are there? So if we see the components of financial reporting, so very first will be the financial statements. Okay, so when we talk about financial statements, it is consisting of the balance sheet, okay, where we have where we record the assets and the liabilities of a company. Then we will having a profit and loss account. Then there will be a cash flow statement which will tells about the cash inflow and outflow position of a company. And then at last there will be a statement of changes in equity. Okay, so these all are the financial statements that we need to prepare to show the financial position of a company. Then after it, next component of financial reporting is the notes to the financial statement, that what all the notes that company has to give regarding their financial performance, they have to give here in the notes to financial statement. Then there will be a quarterly and annual reports. So these only those kind of companies used to make this quarterly and annual reports who all are listed companies. Okay, then there will be a prospectus if the company is going to issue IPOs, initial public offers, then in that case they have to issue a prospectus as well as a financial reporting. And then at last, management discussion and the analysis. So this part is needed only when the company is a public company. Okay, now very important that why the companies has to prepare this financial reporting. Okay, what all the importance are there of the same? So very first is here the for the taxes. Okay, as we all know that if any matter is coming in terms of the finance, so if it is a income in terms of finance, if it is a income, so there will be a tax levied on the same. Government has given some percentage, and on the basis of that percentage everybody has to give a tax. So if we talk about the company, so there is a corporate tax and the company has to give. So this financial reporting helps the companies to know their taxes, and also to the government it is very important to see their financial reporting so that they can see that what all the tax rate they must be having. Okay, then second is for investors and the shareholders. Financial reporting is very important for investors and shareholders as well. Why it is important? Because as we are the investors, if we are going to invest in the company, okay, so in that case we have to see that what is the financial position of a company. If company is doing good, then only investors or the shareholders used to invest in the company, otherwise they won't. So if their financial reportings are there of the companies, then only investors will be getting to know. Okay, then third is for internal decision making. So this financial reporting is also necessary for internal decision making as well. When you will make your financial reporting, then only you will be getting to know that what is your financial position, what is your financial performance. Okay, when you will be getting to know, then only it will be easy for you to take a decision that whatever the target we were set, according to that target we are doing or not, and if we are not doing, then what is the next step. Okay, so for all these decisions, the financial reporting is very important. If we will having anything in a write-up, then only we can take a decision. Then fourth is the for improved internal vision. Okay, now if any internal visions are there of a company that in future what we are going to do. So if we will have our financial performance or the financial position of a company, any financial statements are there, then only accordingly we can see what the internal visions have been achieved and whether we are going to achieve it future or not, whatever the target we have set. Okay. Then there is a for ensuring the profitability. This is also very important. The financial reporting is very important in terms of profitability as well, because when we are targeting or when we are fixing any target regarding the profitability, then it is very important to see that whether that profit we have achieved or not. Okay. So when anything will be there in a writing in terms of financial statement, then only we will be able to see. Okay. Then next is for raising the capital. Okay. It is almost same as the interrelated with the investors or the shareholders. Like if company wants to raise the capital, okay, so very first thing will be if their financial reporting is there, okay, where they are showing their financial position, then only it will be easy for them to raise a capital. Okay. Now here two concepts are there, that how it is important for raising a capital. Very first thing, that if they will earn a profit, if they have a financial statement, then they will get to know that what the profit they have. Okay. And out of that profit, what the retained earning they are creating. Okay. So with that retained earning, will they be able to invest more or not? And if they are not able to invest, then what the additional capital they want. Okay. So for that purpose also, this financial reporting is very important. And from the terms of investors and shareholders as well, if they will not make their financial reporting, then no any investors will be able to see their financial position. Then there will not be any issue of shares or the debentures could be there. Okay. Then next is for managing the financial ratios. Okay. Now if the financial statement has been made, so it is not the end job there. According to that financial performance, according to that financial statement, now they have to show that financial performance in a small chunks, okay, to their interested parties. Okay. Like if investors are there, so they don't want to go through the full financial statement of a company. Okay. They only want to know that what is the earning per share of a company or what is the price earning ratio of a company. Okay. So accordingly, if the financial ratios are there, that helps the investor to see that earning per share or the price earning ratio of a company. Okay. Just like that, if any creditors are there, so they only want to see the reputation of a company in terms of paying the debt. Okay. So in that case, only they will be seeing that what is the current ratio of a company, what is the quick asset ratio of a company, accordingly they will see. So this financial ratio avail there. Okay. So for this reason also, this financial reporting is very important. Now next is the for predictive strategies. Okay. Now company wants to make strategies, that strategies could be like a strategy regarding the finances. Okay. That what the finances, what the fund we need, and by having that fund, where all we are going to invest it, what will be the allocation of that fund. Okay. And after allocating that fund, how much profit we are going to earn, what the return we are going to get. Okay. So for these things also, for these strategies also, this financial reporting is very important, because we have to see first that what all the things we have and accordingly what we are going to have in future. For this, what is needed. Okay. Now next will be for lowering the risk. Okay. Here again it could come in terms of the financial risk, that we have to see that if we are going to run a business, so obviously fund is needed. Okay. So if fund is needed, we have to see that what the fund is needed and accordingly we have that fund or not. Okay. So by seeing this financial reports only, we will be able to know that what is the cash flow position of a company. Okay. What is the debt position of a company. So these kind of study we can do only if we have a financial reporting with us. Okay. So it just lower the risk as well. And then at last, for ensuring the transparency. Okay. If whatever we are doing, it must be shown to others, the interested parties, then only they will be interested in your business. Okay. So this financial reporting gives a transparency there for that particular company ke okay, this company is doing work in this particular field. For that they have these kind of activities and they used to perform well or not, everything will come under that financial reporting. So it is very important for the companies to be transparent for their interested party, and this financial reporting give a note for the same. So for this I am just ending my video. Thank you.